Okay, if you could all mute yourself, that'd be perfect. Welcome to Training Thursday, everyone. My name is Lytle, and I'll be hosting today's call. So, during the month of October, we've been surrounding our Thursday training regarding tips. So, the last couple of weeks, you've been hearing from Dave and Jacob discussing tip and discussing how you could present that to your borrowers. So today we're going to take another little look at tip in a different aspect, on the aspect of how it works and how it changes. So what we'll do is build a particular product, and I'll walk you through that in just a moment. But right here, this is the presentation that they've been building, explaining how to lower your borrower's tip. What I'm going to do is take this link, and I'm going to put it in the chat area. So if you want to be able to take a look at this particular presentation, you'll be able to do so. So I'm going to go ahead and paste it in there so you have a copy of this particular link. So you can see how you'll be able to see the average interest rate for 2015, when it has points, a shorter term, or an extra payment applying to principal. And during today's topic, you'll learn how each of these different items does change the tip percentage as well as that 5-year cost, and that's what we'll dive into. What I would like you to do today is, if you have open up your question area in GoToMeeting. If you have any questions along the way that you would want addressed, please put them in there. What we're going to do today is, actually, I got to change my description. I'm starting with a fixed rate, 10% down. In this particular case, I'm not going to show mortgage insurance, and I'll discuss the reason why in just a moment. So what we'll do is go in, and we're also going to learn different items within Edge. We're going to learn how to copy a product, so you can see how building a TCA will be rather quick for you. And in the end, afterwards, if you would like, we could go ahead and discuss templates, product templates as well as fee templates. So that's where the call is surrounding. So now what I would like to do is, let's just dive into Edge. And if you would like to build this presentation with me, log into Edge and let's create it together. So with that, I'm logging into edge.mortgagecoach.com. And I already have my presentation started slightly. So we'll walk through that aspect of it. And if you're creating the same presentation with me, please go ahead and open up your Edge account and let's start. So what you would like to do is, to start a new presentation, is clicking on New Client. By doing so, the new client is going to create a presentation that can either be a total cost analysis or a rent versus own report. So with this, we're going to go ahead and start a TCA. So I've started my report right here, so I'm going to go ahead and click on it and open it up. So what I did as my title, my report headline, I'm just described it as Understanding Tip and the 5-Year Cost. And what this will do is really help you reach out to partners and really be able to use a mortgage coach presentation in explaining these kind of items to them. So what I had done is, it initially starts as individual. You can see how there's the first, middle, last name, and the co-borrower's name. When you switch it to marketing, you'll notice that you only have a report headline. So it just cleans up that screen a little bit and provides that one line of text. I also want to point out, let me go back to my presentation. Whoops, not that one, this one. This is where the name of the borrower is right underneath the center of total cost analysis. This is where your borrower's name goes. Sometimes if you want additional text, if you're doing a marketing piece, you can add information in the property area, property address, and they'll place below here. So we'll talk about that when we get to the borrowers there, to that property information. So going back to Edge, I put in my information. I'm keeping it as owned so I could see the tip information. It is on the TCA. It's not on the rent versus own, because the rent versus own report is focused on providing the borrower the understanding of the advantages of having a mortgage versus rent. So it's a different conversation than the loan estimate and picking their product. So with that said, let's move on to the next screen. I marked it as purchase a new home, so mark that. I'm using a $100,000 loan amount, so it's just an even number, so you'll be able to see some of these figures. So go ahead and place $100,000 in your purchase price. I'm just advancing through these screens because those screens you don't need to worry about. So let's go ahead and just advance through them so we can make our marketing report. So with that, I have modified my product. So I'm going to put this 10% down. I know with 10% down, you need MI, but for this educational piece, I'm excluding mortgage insurance for now. So with that, I put in our purchase price of $100,000. Let's place 10% in our down payment. 4% is our interest rate, and then put in $360 as a term. So this is just the basic information that you would need to enter on the very first screen here. So this is building our first product. You'll notice in the upper right-hand corner, we have my graph is starting to be built, and I also have my loan to value at the base here. You'll notice as I advance my screen, that's what triggers the save. So I did update this from 20 to 10% down, so now you'll see these figures change. So as soon as I advance my screen, you now see the changes as well as the loan to value. So wanted to point that out. Anytime you make a change, always advance the screen or move to a different screen, and that secures your change. So now what I've done, and I'll talk about the closing cost details, but if you're following along with me and want to use the exact same numbers, you'll notice that your fees are all opened up. Place $679.5 in your APR costs, and then in the non-APR cost, put $603. And what you're doing here is called bulk fee sums, opposed to having closing cost details. And in this purpose, because all of us have different fees, I just want to be able to use mine, so you'll be able to have a, using those same numbers as we're discussing the report. So how I got these and how mine are all grayed out is I use the closing cost details. So if you click on the closing cost details, if you're on an enterprise account, you might have some fee templates already built in your system, so you would have them right here to choose from. And I want to mention we could discuss fee templates a little bit more toward the end of our call, but it's a great way if you're on an enterprise account. If your fee templates that they provided you are slightly off, you can modify these and you can go ahead and save them as new templates. So we could discuss that at the end of the call, but I wanted to make sure that everyone understood, even if what's provided, it could be on a broad scale for that particular state for your company, but your branch might be slightly different. And it's very easy to make branch templates. So you can always email us a support if you're on an enterprise account. We could assist you that way. Or when we discuss fee templates at the end of the call, I'll show you how you can create your own. So with that, you can see all the different fees that I have. I want to go ahead and remove my reserves here. I don't want to show any kind of reserves at this point in time. And I'm applying it to the loan. So again, we have 1504.5 and 603 as our fees. So make sure we have those in there. I think my APR fee was modified slightly. So as I advance the screen, you can see I'm leaving all my reserves empty for this point in time. And the reason for it, I want to really focus on tip as well as the 5-year cost. And removing these helps you understand these a little more. So with that, now let's go to our presentation. So let's take a look at what we have. So we have our first product here, and it hasn't been updated. Let's go ahead and get that updated. Okay, there we go. So you can see my title's been changed to reflect 10% down. And I have no MI. And let me go back into Edge. I'm going to pull up my presentation. I just pulled it out of a preview and it made it the link, and I was unable to do any kind of highlighting. So let's go ahead and clear that out. So you can see I have a fixed rate, 10%, no MI. We all know that a 10% loan most likely would have MI unless it was lender paid and you had a higher interest rate. But for demonstration purposes, we're leaving that out on this particular loan, and let's discuss the tip percentage and the 5-year cost. So with the tip percentage, what this is the total interest over the life of the loan, all 30 years, a percentage against the loan amount. So a way for you to understand that number, if you took your loan amount and then you divided it by the total amount of interest, that is what's going to give you this tip percentage. If you're curious how you get that interest percentage or the interest amount, we have that in the amortizations on our loan. But we also, you could make this as a 30-year mark and be able to see the interest as well. But let me show you, let's go into Edge, step away a little bit to show you where you can get that interest amount for that tip. So let's go back to Edge. So now I'm in my products screen. Hover your mouse over presentation and choose select report. You can see how anytime you're put your mouse at the very base, we have jump outs above. This is just a quick way to move through the screen. So I'm going to click on select report, and you'll notice that I have the total cost analysis chosen. Right below it there's an amort schedule choice. So if I click on amortization schedule and advance my screen, you can see that you'll be able to choose an amortization schedule for any of the products that you're showing on your report. So in this case, here's my 10% down, and let's take a preview. So this is the basic of the amortization schedule, and you'll see in the second to the last column, we have total interest. So if we scroll down to the very end of the screen, you can see that they paid $64,683.73 in interest. So that's the figure that is being calculated for tip. So if you took the loan amount divided by this figure, that's your tip percentage. So now let's go back to the presentation and put it back to the TCA from that amortization schedule. So just remember, you always have access to that amortization schedule for any of your products. So that's the first lien tip, and that's how that number is calculated. So just remember, loan amount divided by 30 years of the interest if you have a 30-year term. So with that, that's the first bit of tip. Now we're going to discuss that 5-year cost and what that 5-year cost is comprised of. So with the regulation, they put in that tip because they thought that was a valuable piece of information over the life of the loan to compare that interest rate. And this is a good for those comparing against loans that have no cost. They're going to pay with that interest rate, and this is a quick way of showing that difference or that between that higher rate, lower rate versus fees. So that's one way of doing it with the tip. So now the first lien year costs. What this represents is, and this is a great way of segueing to a CFP website that I think is very valuable here. So if we go to the CFPB's website, and I'm going to place this in the chat area, you probably have already seen this. This is the loan estimate explainer. The CFPB really thought to keep very basic titles, and they sure did it, because what else can you have basic than an explainer? So let's take a look at this form. This is great. This is a form that the CFPB has provided borrowers to understand that loan estimate. And to me, it's a great form not only for the borrowers, it's great for lenders and loan officers to understand it as well. This way, you're understanding the questions and the information that the CFPB is providing to the consumers. So with that, you'll notice at the very top, you have check details, and they also provide a tab where it's definitions. So you've got a lot of information in this area. Also say when you're checking details, these are the questions that they're prompting the borrowers to ask. So if you click on the plus sign, you'll find more information hiding behind these different areas that they're pointing out. So you can see how all the difference, how you just widen it up, and then you can learn more about that information. So this is a great form to be able to have. Also, it's great to be able to provide your borrower. Excuse me, I have a question from Dave. And Dave, yes, it's the loan amount divided by the total interest that would be paid on the loan. So you take that, run an amort schedule. Then at the 30th year, you get the total of interest that's been paid for the life of the loan. Take that figure, and then that is what's divided into that loan amount. So I hope that is clear. If not, go ahead and put it back in the question area. So with that, we have our loan estimate. This is the first page, very similar to the GFE, but now they're including information from that Reg Z that's no longer there. You have your projected payments, and you recognize this area from your TIL, your Reg Z. So with that, and the upper area is similar to what you've seen on the GFE. Moving to the second page, it's just your fees, your breakdowns of the different charges. You're familiar again with this as similar to the GFE. Remember that your fees here are in alphabetical order, so when you're at loan amount, if you're at the loan amount, sorry Dave, let me look at it. You'll see that they're in alphabetical order. So with Mortgage Coach, our fees are in alphabetical order, so it is easy to see the fees and then be able to look quickly in the alphabetical order on their closing estimate. And then next, what they have is your comparison amount figures. You have your 5-year cost. This is the total you'll have to pay of principal, interest, mortgage insurance, and loan costs. So this is all the information that you've paid for that 5-year mark. And they chose 5 years because usually a borrower either stays in their house for 5 to 7 years, refinances, or moves. So they thought a 5-year mark is a good figure to be able to show the borrower. So again, what that information is, the principal is for that 5-year cost, your interest, if you applied mortgage insurance, and your loan costs. So that's the 5-year, and then back to the tip, your total amount of interest that you pay over the loan term as a percentage of your loan amount. So, and Dave, I look at your figures, you're saying the loan amount's $90,000 and you have $544,000 in interest. That's how I'm reading that. So I'm not quite sure on your figures, but I'll be able to help you in a little bit. So this is what we're going to focus on. So now let's go talk about the 5-year cost. It's principal, interest, MI, and loan costs. So now let's move to the presentation. Here's our figures. So this is principal, interest, mortgage insurance, which in this particular case we've excluded, and cost of the loan. It's great to be able to look over at the more info area, and this is where you can find those figures. Here's that principal paid. I am choosing 5 years at the moment. I have my total interest in MI. In this case, it's only interest. And my closing costs. And this totals my 5-year cost. So again, just to clarify that explanation, 5-year costs consist of principal, interest, mortgage insurance, and closing costs. In our short-term area, you can find that information quite easily. You have your principal, interest in MI, and your closing costs. So now that we understand both the percentage, which is the loan amount divided by the total interest over the life of the loan, and then the first year cost, or the first 5-year cost, and that is principal, interest, mortgage insurance, and fees. So what's missing is our mortgage insurance. So now let's create our second report. We'll add mortgage insurance, and you'll see that the tip percentage most likely hasn't changed, but your first 5-year cost will, because now we have to include that mortgage insurance. So now let's learn how to copy a product within Edge. I'm going back to my products. You see I'm hovering my mouse over products. I clicked on it, and it brought me to the last screen that I was in. So to add a second product, you'll see at the lower right-hand corner, there's an Add Another Product button. You click on that, and let's just go ahead and put in fixed 10% down with MI. So now we can understand the difference between the two. I want it exactly the same as my first product, so I'm going to use this Copy From button. I'm copying from the 10% down with no MI. You can see how everything copies over rather quickly and easy. My loan amount, my base loan amount, my rate and term. What's great is the only thing we're going to have to modify is our mortgage insurance. So as you advance the screens, you can see how your fees carried over. Don't need to make any modifications here. Now let's go to our monthly cost screen and let's add mortgage insurance. Let's lower that a little bit. So a 0.69 factor, and make sure the MI cutoff percentage is at 78%. I'm going to advance my screen so this way it saves this data, and let's go look at our presentation. You can see now that my second product just appeared on my presentation, and let's take a look at our tip percentage, because the only thing that we changed was mortgage insurance, and tip is only interest, the loan amount divided by interest. So because I added mortgage insurance, that's not changing my tip percentage at all. But it did change my first lien 5-year cost, and that's because we've now added mortgage insurance. So if we go to that More Info button, you can see that the interest in MI is now a greater number on that second product. It's capturing that mortgage insurance for that period of time. So hopefully this is helping you explain how these figures move with the different data that you provide in your loan options. So adding MI does not change your tip percentage. It only changes your 5-year cost. So now with that, we are getting a greater understanding, percentage of fees over the loan amount, and then this is just what we paid over the 5 years of principal, interest, MI, and closing costs. So now let's create an additional product, and now let's show how by applying money toward principal, you can reduce that tip percentage. You can also show them how they can have an earlier freedom point. So let's go into Edge and create our third product, again using that copy button. So let's go into Edge. I'm going to use the back screen, and I get back to my last screen of my product. You'll notice now when I hover over the product, you have 2 jump outs for each product we've created. You can create up to 4 products on a mortgage coach presentation. If you're doing a refi, it's 5, which includes the current mortgage. So let's go ahead and add another product. And we're going to go ahead and label this one fixed, 10% down with reduction. So this way we'd be able to see the full figure in action. Let's use our copy from. I'm going to use the one with MI, because most loans, if you have 10% down, unless you have a higher interest rate, will have mortgage insurance. So let's use this piece and press OK. You'll see everything copied over for us. We have the down payment rate. You see those fees, they're perfect. And then you see the MI carried over. So we're done with this third product because we're going to add principal, but adding principal to a product is done in the analysis screen. So before we go to the analysis screen, let's just take a look at our product and highlight a few items. So now you'll see we have our third product, the 10% down, and now we're going to add a reduction. You can see how the figures between the 2 products are the same. What we're going to look at here is not only the tip and the 5-year cost, both of those are going to change, but we're also going to go into the More Info button here, and we're going to discuss the reinvestment strategy. So with that, we're going to place a reduction of payment. We're going to apply principal, additional money toward principal, and this is where we're going to see it. So I want to highlight those areas as well as that freedom point so you can see where we're going to be making those changes and where it's going to reflect on the report. So let's go ahead and close out the screen, and now let's go into Edge. We'll also notice that in this area here, we're going to have an additional line for the reduction of payment. So want to show all the areas where that loan, the data will change onto the report. And I'm also placing the link to the report in the chat area. So if you wanted to look directly on the report, you could do so. And how I got that link is in the lower right-hand corner. I pressed the button Share. With that, I was able to copy the link rather quickly and post it in the chat area. So that helps if you ever had a question and need to email support. You could grab the link. It's always helpful to have that link handy when we're reviewing the ticket. So quick way. It's also a great way of sharing that in the email to your borrower. So let's go ahead and go back to the product, and let's add that reduction of principal. So let's go into Edge. If I advance my screen, I automatically come to the analysis, or you can press the analysis screen automatically to come here. What I'm going to do is click on reinvestment strategy. This is where you can reduce your principal by applying that additional monthly payment. So you can see here is our product. You can see the savings of the 10% down with no MI. You can see its monthly cost is $51, and you're saving that over the two products. In this case, you have the reduction payment line. Let's just apply $100 a month toward principal. So by doing so, you've reduced your loan term to 21 years. And now let's see how this is reflected on the report. I pressed OK. Remember, we have to advance the screen to be able to see that change be reflected on your presentation. So if you notice, it just made its change. In between the payment and cash to close, you'll notice a new line item for the reduction of payment. And you can see that $100 being applied each month. You can see how the cost has just changed significantly for the tip. And the reason for that is each month, or the interest is based on the outstanding balance each month. And every time you apply that $100, that outstanding balance decreases, which means it's less interest that you are paying. So a quick way, let's go ahead and open up our More Info button, and let's take a look at that interest. So you can see how applying that additional $100, it is reducing that amount. You could see it in comparison. But you can also see how the interest in MI, it's still lower here because we don't have that mortgage insurance being reflected. So these are the two we're going to compare against. And then you'll also notice that the 5-year cost went up. And why is that? The reason for it is this, remember, it was our principal amount, our interest, our mortgage insurance, and closing costs. By applying $100 toward principal, look at that huge jump that they have just made. From $85.97 that they paid down just by paying their standard payment. At the end of 5 years, they now, by applying that $100, their principal balance has been reduced by $15,000, a little over. So you can see how this number is increased, and then you also have a little tiny decrease down here, but not as much. So you can see how these figures are being added together, and that's how you got that little bit of increase. And again, it's due to principal. So you're applying more principal to the cost of the loan, as well as that interest amount is also decreasing. So sort of a balancing act. You're paying more principal, you got that, but your interest is also decreasing, and it balances out. So I want to be able to point out that. If I lost you in this area, please put it in the question box, and I can review this one more time with you. So you can see how with using that reduction of principal, how you'll be able to really educate your borrowers as well as your partners. It's not just, applying it. You can see how the numbers are affected, and you'd be able to show them how to pay down that loan a lot quicker. So you can see that. And for those of you, I'm highlighting my report just by hovering my mouse over the field and left clicking. If I do it again, it removes that highlight. And you'll also notice at the middle bottom, there's a clear all button. If you click on that, it will clear out all your highlights at once. So if there are any questions at all regarding this information, please go ahead and place it in the question area, and I can review it a little bit more simpler. and break down any kind of questions. But it is in the chat box, that loan estimator explainer. It's a great tool to be able to have handy, and you also have those definition aspect as well. So not only understanding it, you also have those definition. Okay, so we're halfway through our call. We discussed tip for 30 minutes. I was going to discuss product templates or fee templates, but this is your time now. If there's something specific you want to see in Edge, let me know. Place it in that question area, and I will go ahead and we can address those during the next period of time. So want something specific, please put it in the question area, and we'll go ahead and address it on today's call. So now I'm going to go to Home, and we're going to discuss fee and product templates. So with that, I want to point out our settings. And in our settings, this is where fee and product templates are stored. So first we have our contact information. So always make sure you have your contact information. Double check it if you're new to Mortgage Coach. Also confirm your license number. Make sure you have that identifier in front of the number. Because if you look at the presentation in the upper right-hand corner, you'll see your licensing information. If you do not have that identifier, it's just going to print a number, and it won't clarify to anyone what that number represents. So make sure, we see that a lot when it comes over in support, make sure you have that identifier, whatever you choose in front of your license. Anytime you make a change here, always press save. That will update your account. If you have fields in gray that you need changed, your license number might also be grayed out. That means you're on an enterprise support account and your admin had locked down those fields. So if you need modifications, just email us at support@mortgagecoach.com and we'll assist you. Or you can reach out to your admin and they'd be able to help you out as well. So the next screen, it's important that you upload your image. There's quite a few reports that come across support, and the image hasn't been loaded. So again, back to the report in the upper right-hand corner, you can see where that image is displayed. If you're on an enterprise account, possibly your logo has already been carried down for you. You might also have it locked here at the base. So if that's the case and you need an adjustment, just like with your contact information, email us at support or contact your admin. So next we're going to go and discuss fee templates and product templates. This will help you out tremendously. If you're on, have access to an API, if you're using Optimal Blue or many of the other APIs that we have, product templates probably won't be necessary, but fee templates are, because most companies don't have their fee templates built in, and these are very important to be able to have. So what we'll do is show you how you'll be able to create a fee template. We're going to do it in the settings, but you also can create it while you're in a product itself. So saving time while you're creating, you can create them that way as well when you create a presentation. So first we'll start here, then we'll go into the presentation, apply that fee template so you can see how it works, and then I'll show you how when you're creating a presentation, how you could save a fee template at that point. So first off, you can see how you can have a list of templates here. If you've been in Edge and you see fee templates in your drop-down, but you don't see any here, that means you're on an enterprise account and the fee templates are held at a corporate level. You won't see those fee templates, but the ones that will be in your account here are the ones that you create. So with that, to start a fee template, you'll see in the lower left, there's a green button labeled New. Click on that and we start the process off. I'm typing in fee template and I'm placing in today's date. This is just so we know this is the template we're working with. You also will be able to, if you originate in multiple states, most likely your fee templates are slightly different. So if that's the case, it's a quick way of adding a test for state and just through that drop down. Also want to point out, once we're done with this, you have a model to use as a copy and create other fee templates rather quickly. So let's press OK and start this process off. So now you'll see we have a bit empty screen that we can go ahead and add fees. The best way to add fees and create fee templates is going to your origination system, and used to be a fee sheet. Not sure if you have access to those anymore, but that's what you need. And those are easy because they have the fee description, the dollar amount, and if the fee is an APR. So with that, let's go ahead and create each one of those line items. So I'm clicking on Add Fee, and let's go ahead and add a processing fee. So I typed the letter P, and I came down to processing fee. Let's say that is $4.95, and it's an APR fee. That's how simple it is to be able to place that line item. So to do a non-APR fee, again, I'm adding a fee, and then I'm going to use appraisal. So I typed A, went to appraisal fee, and then place that dollar amount in, leaving it unchecked as APR. So now we have an APR, non-APR. So what happens if you're looking at our fee description and you don't see your description? It's not a problem because we have a place where you can add your own custom fee. So click on Add Custom Fee, and I'm going to label it Custom Fee. And again, I'm placing today's date, so this way we know it's the one I created during our training. So with this fee, you'll be able to have that percentage off the loan amount, or the property value, or sales price. With that, you also can mark it as default prepaid. Now what this means is these are for costs that are not fees. So your escrow costs, those type of items. If you're creating a custom fee for earnest money, that's not a cost of loan. Make sure you mark this box so it isn't considered a cost. So that's what the default prepaid is. And then if the fee's an APR, definitely have that marked. So once I press OK, that custom fee that you just built is now in your drop-down. So any future fee templates that you create or use, you'll be able to use that custom fee. So with that, let's go ahead and place in a $600 amount there, and you can see how that label's made. So now contributions. Contributions is always a fun topic. So let me show you a couple different ways how to do a contribution. So in Add Fees, we have a label called Contribution. So if I go in my C's, you can see it right here, Contribution. And remember, it's singular. If you see one in there, it's plural. You created it as a custom fee. So ours is contribution. And I've heard from a lot of loan officers, they just like adding this figure in. So this way they'd be able to hold that discussion with the borrower possibly. Or if they're doing open house flyers, place that line item on there, again, to hold the discussion possibly about the seller contributing toward closing costs. So that's contributions. When we go into a fee, a product, we'll go ahead and dive a little bit more into how this contribution field works. So with that, that should be able to provide you the information on adding an APR, non-APR, a custom fee amount, a contribution, and then we also discuss PPE, which is prepaid escrow or any item that's not considered a cost to loan, like earnest money, things like that. So if there's any questions on fee templates, go ahead and place it in the question area. What we'll do now is let's go into an Edge presentation and let's apply the fee template that we have, and then I'll be able to show you how you can copy while you're building a presentation. So I'm going to go to Home, and let's start with New Client. I'm going to make this just a simple fee templates. I'm making a notation in my friendly name because this is a great place to provide a note referencing what this presentation is. Training Thursday. Advancing the screen and marketing and purchase a new home. Let's just put again 100,000. Now instead of advancing the screens, I'm shortening this down. I'm going directly to products and starting my product so we could take a look at that fee. So we'll just say conventional fix, 100% or 100,000. Let's go ahead and put it 20% down, 4%, 360. Now let's move to our closing cost screen and take a look at those closing cost details. So in the drop-down, you can see the template we just created. And if you're on an enterprise account, this is where you're going to see the fee templates that they are created that your corporate office created for you. So they'll be in this area here. So I'm going to go ahead and select the fee template we just created, and I brought it down. So you can see how that's going to save you quite a bit of time by taking the moment and creating those fee templates. So let me show you how contribution works now. So below you'll see that blue bar, the borrower paid fees of $15.70. You'll have lender paid, it's at 0, seller paid at 0, and broker paid. So with contributions, it's a custom label within Mortgage Coach. I'm saying that they're having a $500 contribution. You'll notice that the $15.70 is now going to be decreased by $500, and I have indicated that the lender's picking it up. So you can see how the lender paid is now reflecting $500. So let's change it to seller paid. So if I go ahead and go to the drop down, you can see how it switched from lender to seller picking up that cost. So that's how our label works. We understand it as a positive and we know how to apply it. Remove it from the borrower and apply it to the lender or seller. So if you wanted to use a different label for your contribution, there is no logic behind it. So with that, let me just show you, and we'll talk about earnest money. So if I go ahead and put in earnest money, and then remember, I want to be able to use the default prepaid prepaid. This is telling me that this is not a cost for the loan. I also want to mark it if you want. If for some reason you're using a percentage, you could go ahead and use the sales price or property value. Once I press OK, that earnest money is now in my drop down and can be used for any future presentations that you're creating. But because this is custom, remember there's no logic. So if I went ahead and placed it as $500, it's just adding that cost to the borrower. And if I went to the lender, it's just showing that the lender's picking up that cost. We'd really want that earnest money to apply against the borrower's figures. So to do that, anytime you have a custom fee that is a contribution type of a fee, you have to enter it as a negative, and you have to leave it as a borrower so it offsets the borrower's costs. So again, if you create your own label that's custom and it's considered any type of a contribution or earnest money, prepaid items, always enter it as a negative. If you use our label contribution, you can leave it as a positive and indicate who it's being paid by. So that's how you can go ahead and apply a fee template, add additional, showing how you can add that earnest money or use that contribution field. But now say you were on an enterprise account, you have a fee template, or maybe you've created a fee template, but this is the first time you're doing a new product in your presentation, and the fees might be slightly different. It is the case. Your conventional fees most likely are slightly different than your FHA fees. So templates are going to be different depending on your loan product. So with that, it's so easy. Say you're coming in here, I'm doing an FHA now, and maybe my appraisal fee is only $450. Perfect. Modify your fee template, and you'll see at the very bottom right-hand corner, Save as Template. This is a quick way of saving what you have just done while you're in the presentation. So when you're working, just remember to build these fee templates. Anytime you have a new product, save that fee template. So this way, the next time you do that product, you're not building a fee template again or making those modifications. So you'll see at the very base, I press Save as Template, and now I need to provide have a template name. So I say fee template number 2, and I'm putting today's date as well. Let's use dashes this time. And then press OK. And again, you know, maybe you're originating in a different state and modified your fee template for that particular state. So again, you can identify what state it's for, press OK, and you'll now notice in your drop-down you have that additional fee template you just built. So there's 2 ways of building the fee templates: within your presentation or within settings or maintenance area, where you can build fee templates directly from there. So anytime you're building a fee template, you always want to apply it to the loan. That totals all the APR fees, prepaid escrows, and non-APR costs, as well as contributions. You'll see that here. They'll all be grayed out. And the only way you can make the change is go back in to the closing cost details and make your modifications. So if I want to remove that, I can remove the dollar amount. To remove the whole line, you have that trash can toward the left. Press that and you remove the full line, and it's gone from the presentation. So I apply that to the loan. The figures have been adjusted. I want to point that area out and how to modify your fees. And then you have your monthly cost screen. So if you're working in Edge, I want to point out developing a product template might help you move even faster. If you're bringing files down from an API, you won't need a product template, but if you're building these from scratch or possibly adding an additional product to a file from an API that didn't carry over, this is a quick way of building that template to get you through creating that product. So you'll see at the very bottom, first what I would like to do is possibly you want to be able to capture those monthly costs, so you don't want to enter those again. So I'm going to go ahead and enter those monthly costs. And I'm going to put 0.35 for my hazard and 1.25 for my taxes. I'm going to go ahead and, let's see, was this 20% down? Yes, it was. I'll leave MI off. I also want to collect 2 months taxes, 4 months reserves, and 12 months premium. I want to save this data as well as my fee templates, and I could do that in a product template. So let's click on the product template. It's using the label of that product. I'm just going to add the date to it. Oops. There we go. And press OK. Remember, I'm only putting the date in it because I need to identify today's templates versus previous. So with that, let me first show you where these templates have been saved. So I'm going back to my settings. You can see the 2 fee templates, the one I developed in Edge, how I saved it as a template. I can now modify it. If for some reason I need to make any modifications, this is where you modify your fee templates. Now let's check out the product templates. Here is my file right here. This is all the data that's saved. What I want to remove is the interest rate. You could keep it in there, but I like removing it because I know that's a variable that changes from loan to loan, and I just don't want to take the chance of having it there and forgetting about it. So now that I removed the interest rate, let's go ahead and go into Edge and apply this template. So if I go to Home, here's our fee template file we're working on. Let me double click. It opened up to the last page I was in. So let's add another product, and this time let's use the product template to build it, and you can see how having the product template, what carries over. Built by product template. So first I'm putting my purchase price. And now let's go for the product template. You'll see that right here, add from product template. And let's find the product template I developed today. It's usually the last one. There it is. Here it is. It's dated. So I'm choosing my product template. You see the 20% carry down, my term. You notice that my interest rate's been removed, so I need to key in my interest rate. All this information's done. Advance my screen. All my fees that I saved in my product template also carried over. If you ever need to make a modification, because sometimes, the fees do change from loan to loan, you could come in here and make those changes. Once you do, you can always, remember, save it as a new template if it's a new product, or just go ahead and apply it to the loan. I'm going to add my 15 days prepaid interest, which you can add that to your product template as well. And you'll see in the monthly cost screen my hazard, my property tax, as well as my reserves were part of that template. And that's how you can get through developing these presentations so much quicker, is by saving these as templates. So with that, I am going to be wrapping up the Training Thursday. I do want to point out a couple items to you by going to our help screen. And then I'll also stay on the call for a few minutes if you have any questions you need answered. So click on your help button. This brings you to our knowledge base, our Mortgage Coach Support Center. Many video tutorials. I also want to point out the search engine. So say if I have a question on MI, if I place it in there, all the video frequently asked questions surrounding MI will display for you right below. Other items, we have sales training, we have sales scripts. Not quite sure how to explain that presentation. How to read the TCA. We have great areas here that would be able to advance your knowledge in the Mortgage Coach presentation, as well as help better educate you. Two other items I want to point out. Access the monthly event calendar. Training Thursday isn't the only event that we have for training. So not only do we have our Mortgage Coach, our coaching calls that you can see those topics, you can see we have an introduction to beginner session. That's every Monday at 9. If you haven't taken this training, please do so. And you'll see how these trainings progress. Monday we have a beginner's training. Tuesday we have a coaching call. Wednesday we have mobile conversation. So if you're struggling with that mobile conversation, please attend this Wednesday training. We focus only on the mobile and the mobile app. So definitely be able to have that conversation here. Training Thursday, if you ever want to see some particular product or topic and how it's built on your presentation, this is the day to do so. Just email us at support. We can always take that topic and present it in the following training. And then lastly, we have our Mortgage Coach University. So for the first 3 weeks of a month, we do various trainings. We have a 101 beginners as well as an intermediate. And to see all those trainings, just click on the link and you can see all the various topics. Not only that, it helps you explore your Mortgage Coach presentation. These are all the different areas of training. You can see how different presentations that you'd be able to present, understanding the TCA, also how do you use all the various features that we have within Mortgage Coach. So take a look at that, take a spin, be able to see all the different things that you'd be able to do in your Mortgage Coach account. And then lastly, Coaching Call Archive. This is where we have our past coaching calls as well as Thursday's trainings hosted. So if you didn't listen to the first couple Thursday trainings of the month, you'd be able to see them here and here. And this will provide you an overview more of how to have that conversation with your borrower. Also have some great coaching calls as well. So with that, everyone, I am wrapping up our call today. Thank you very much for attending. Any questions at all, please email us at support@mortgagecoach.com and we'll assist you. Please remember to send the link with your email. This helps us out in looking at the presentation and answering your question. Thank you very much and enjoy the rest of your day. I will stick around for the next few minutes. If you have any questions that you need answered, I'll be happy to do so. Thank you.